Good afternoon, ladies and gentlemen, and welcome to the Fusion Antibodies PLC interim results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's situated on the right-hand corner of your screen. Just simply type in the question in the box below and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. And I'd now like to hand over to Paul Kerr, CEO, and James Fair, CFO of Fusion Antibodies. Good afternoon to you.
Thanks, Mark. This is Paul Kerr, CEO of Fusion Antibodies. Good afternoon to all the people who've signed in. I'm glad to have the opportunity to discuss the H1 interim results 2020 with you all. And as Mark said, some questions have been submitted, and you can submit some questions, and we'll do our very best to answer them live at the end of the presentation, or if we have to maybe look at some stuff afterwards, we'll try to do our best to get those answers to you guys as well. Okay, so if you see the slide, we're going to kick off here. My colleague James Fair, our CFO, is on this call with me, and together we will run through the presentation. So there's a disclaimer here. You can see that this is a standard text to show that this is for basically we're a publicly PLC company, and you can read this at your own leisure. So Fusion Antibodies, who are we? Right, we are experts in preclinical development of antibodies, mainly for therapeutic use, but also for diagnostic purposes as well. So actually around about 95% therapeutic use. And in that area, that space, our main pillars are discovery, engineering, and supply. So just to give you a quick, discovery is the generation of antibodies from an idea, basically us making the antibody from scratch. And that's what discovery side of the business is. Engineering is where we take other people's antibodies, they come to us, and we re-engineer them, primarily humanization, i.e. make them human so they can be injected into people as therapies. And also put supply, which is the scale up for preclinical testing of antibodies, and for going forward to clinical supply and CGMP. So we can make the seed cell line here at Fusion Antibodies, and then we would pass over to large-scale manufacturers to grow that up. So they're the three main pillars of Fusion Antibodies, and I will touch on those later. So who do we work with? Now, as I mentioned, it's all about mainly drug discovery. So drug discoverers, scientists from all around the world, in all sorts, from large pharma to research institutes, biotech, and also more increasingly virtual companies. And what I mean by virtual companies is asset-centric companies that basically it's people who have basically own the IP of an antibody, and they're using companies like ourselves, CROs, to process and be their arms and fingers to produce the antibodies and scale up to pass it over for testing. So basically, it's run virtually, very lean, and all the money is on the actual antibody targets themselves and the IP itself. And this is a very efficient way of first discovery. And these companies then will plan to license them out to larger pharma companies as they go forward. So on this next slide, so we're all about accelerating the customer journey, and all our tools and platforms are really to improve the speed of discovery, and also the actual yield and the production of the antibodies, to make them more efficient, to make them more potent, so that they've got better efficacy in the clinic. And that's a never-ending goal. So this year in 2020 with COVID-19, that's been unprecedented. Since that virus was discovered in the 31st of January, 31st of December, there's now 3 vaccines, and there's 2 antibodies. One's from Regeneron and one's from Eli Lilly, and this is an unprecedented speed of getting from a target to a fully commercialized drug. So, and whereas normally we talk about 10 years for therapies and could be even longer for vaccines, so there is the market will have completely shifted. We now know what we can do in the shorten these timelines of drug discovery and development. Of course, I don't think we're going to beat this. It was almost like a war footing. Like Eli Lilly spent $400 million on COVID-19 alone. They used the company jet, the chartered private jets, the ferry scientists and samples all around the world to expedite that antibody development. So that's not going to be done on a normal pathway, but definitely the tools and the things we learned that we can go faster. The regulatory systems can be faster. So this is exactly what we're into in the shorter timelines and creating value. So we have a very specialist scientific team here of bioinformatics, cell line developers, antibody engineers, geneticists, etc., people in biochemistry. We've been around a long time. Our company started 20 years ago, almost to the day, and we've got a proven track record with multiple targets in the clinic. In fact, another 2 of our humanized antibodies, we found out one last week went into the clinic from a spin out from ex-Merck Serono in Geneva, and another company in Basel also went into clinic last week. So to give you an example of this, was in 2012 and 2013 when we first launched our next generation CDRX humanization technology. So this is around the engineering piece. In those 2 years, the total number of projects we did was 10. We now know 6 of those 10 antibodies are in the clinic. However, of those 10, we don't have any carries or milestones or royalties in those ones. Those came later after 2015 when we did a project with Roche, who came to us, and we were then put on the patent for HER3, and they said we were better than a country mile than many other companies they tried that year. And so going forward after 2015, we've now got about just over 2 dozen projects where we have carries or milestones. But the main thing was, of those 10, we've got a great track record. Fast forward to 2019, 2020, we have now done 100 humanization projects, so 10 times more. And we continue to improve and develop our CDRX platform. We are working with Queen's University of Belfast under a KTP, or Knowledge Transfer Partnership Program, to add machine learning to improve the algorithm even further, so we can increase the productivity even further and increase the capacity of our humanization platforms. So that's just the continued improvement. So going forward, this next slide, this shows this informatic really shows you the discovery wheel, starting with discovery through the engineering and supply. And it's a la carte. So people, scientists or companies will come to us at different levels. If they come to discovery, there's probably a higher chance that we will have maybe potentially carries in that aspect. Also discovery, we've been working on the Mammalian library for the last 2 years. This is a next generation library where we can synthetically create antibodies, fully human antibodies, so they don't need to go through humanization. So it's going to be faster, and it's completely synthetic, so it allows us to go after targets, or our target companies can go after targets that are not currently addressable using the current methods attainable. So we have put a lot of effort and invested a lot of money and time in the last 3 or 4 years into this platform in the discovery section. And this is the one that we were going after 3 immuno-oncology targets. We still are, but at the start of this year to try and help with the COVID-19 pandemic situation. We also added COVID-19 as a target, or SARS-CoV-2 as a target. So that was put in the very front of the platform. So, and we have now been generating that platform going forward with COVID-19 and the other targets to follow. So engineering, this is the antibody engineering and humanization and RAMP. RAMP is our rational affinity maturation platform. Affinity maturation is basically a process where we can make antibodies with a low affinity. This is how they bind to a target. So general rule of thumb, if the higher the affinity, the tighter the antibody binds to that target. Let's say an oncology target binds to the tumor, and therefore rule of thumb, it's going to be more effective, more efficacious. And this platform, the RAMP platform is actually developed from the CR humanization platform, and it creates using again in silico methods and computational methods a way of generating a huge number of sequences that can be engineering the original antibody to be performed better, to perform a higher affinity, to tighter binding to the target, but also has other manufacturability qualities. We can increase the yield per liter as reduce cost of goods, and we can also engineer out sequence liabilities of the DNA sequence so that the antibodies themselves are actually more potent. So therefore it costs less money for them to be engineered. It can be fixed at the processing or processing and manufacturing level, but it's very expensive. You do it at the gene level. This makes it much easier and more cost effective for our clients going forward. And then supply is what it is. Supply, we use this CHO cell lines. These are standard cell lines that are used in over 90% of all the biologics created in the world. So we can create the seed here and for the stable cell line, and to go forward to partners for CGMP, that's current good manufacturing practice, which is the control that these antibodies will be made for clinical use. So that is the journey from idea or discovery right through to clinical supply of the seed cell lines producing those antibodies of choice, and it's a la carte. They can come in at any stage. So the highlights for the 6 months period, H1 period ended 30th September 2020. Now, we're really pleased to say in the most challenging business, and not just business, but life as we know it, the pandemic, we've grown revenues by 9% year on year. We know this figure could have been higher if it was normal business conditions and the COVID-19 wasn't an issue. Also, the COVID-19 program introduced as part of the Mammalian Antibody Library Development Project. We raised money to help this, and we also applied for a grant from Invest Northern Ireland that worked with Queen's University of Belfast. So all of that has come through in the period. We've increased our research and development expenditure by 50%, primarily around the library project, but also, as I mentioned, the KTP on the CDRX humanization platform. The losses are at the same level as H1 last year as this year, even though we've increased our R&D expenditure. And also just on the raise, we raised 3 million, which is a highly oversubscribed placing at the start of the financial year, to primarily strengthen our balance sheet, but also to add in COVID-19 to our immuno-oncology targets and the development of the Mammalian Library project. So our cash position at the end of the period was 3.24 million, compared to 1.5 million at March 2020. I'm going to pass you over to our Chief Financial Officer, James Fair, and he'll maybe just walk you through some of the numbers, and I will come back later.
Yes, thanks, Paul. Good afternoon, everybody. It's James Fair here. Obviously, we put out the full financial statement for the 6 months by RNS on Friday, and this is just a brief extract here. In terms of revenue, as Paul said, very challenging climate to do work for everyone, and in that midst, 9% year-on-year growth was very satisfying. I would have thought that in more normal times that would have been double-digit growth, which is more like we have seen in the past, but still a decent result. You also see that compared to the same period last year, we have improved margin, and margin is more along the lines of what we achieved on the full year last year. Now, we always say that our margin aspirations are in the sort of 49 to 52% range, so somewhere around the 50% mark normally for margin. But what we have been doing over the last 2 or 3 years is investing for growth, and one of the things that involves is adding capacity and adding the highly skilled scientists and adding to that, building that team. Now, highly skilled scientists, well practiced in the skills and techniques which we're employing, which are cutting edge, they don't come off the shelf. Different people come with different experiences, or else we're hiring graduates or postgraduates who are coming in but need to learn the Fusion way and need to develop things. So we tend to have scientists brought in ahead of demand, and we spend a certain amount of time training them and bringing them up, and there are costs associated with that. So that keeps our margin a little bit below where we would be in calmer growth phase, I suppose, more established phase. One of the lines not showing there, I suppose, is administrative expenses, and administrative expenses includes R&D, it includes sales and marketing, and then all the usual overheads that you would expect to see. Because we're investing for growth, we're investing in the sales and marketing side of things to expand our reach, to reach new people, to reach new geographies, and to generally get the message out there and explore why we're not reaching 100% of the market. So we're investing in that, which is again a driver of growth, and we're also investing in R&D. That's partly to keep our existing services at the cutting edge of what the industry expects, because the goalposts are forever moving. And also, as Paul alluded to, the development of the new platform, the antibody library, with the proof of concept targets going through that at the moment. And EBITDA is improving, is becoming less negative. And when you consider the fact that at the same time we're increasing our R&D spend, if you take the R&D out of that, then EBITDA would be slightly positive. And that's a trend that we are planning to see and extend as the revenue growth comes through, to have the trading aspect of the business contributing more towards the ongoing costs and development, and producing a little bit of cash to support the R&D stream. Moving on to the balance sheet, or summary statement of financial position. A nice solid balance sheet in my opinion. Nothing terribly surprising there. I suppose the current assets are where we want to concentrate our thoughts. Cash and cash equivalents. So we did have a fundraise in April, May. Primarily the reason for that was to keep funds flowing towards the library development program, and also to support working capital as we go through, and we're very comfortable that we've got sufficient cash now on the balance sheet to help us to realize those dreams. The other line I would draw on there is inventories, and that's up significantly, not so much from March, but from September. And one of the risks we would see arising both from coronavirus and to an extent from Brexit will be supply chain disruption, potential supply chain disruption through the winter. And that's for laboratory consumables, not necessarily particularly high value items in themselves, but costly if we interrupt our work because of a lack of them. So we're continuing to keep our inventories in good shape and purchasing well through November here to make sure that we don't have any sort of interruptions in business on that side of things. Otherwise, everything else there, I think, is much as you would expect. On the statement of cash flows, then, the cash used in operations is a mixture of the R&D expenditure and also increase in working capital needs that I've just mentioned. Investing activities is principally fixed asset purchases, equipment. We bought some equipment in the period primarily for the R&D program. And we would envisage some more key pieces of equipment that will be used not only in the development proof of concept phase of the library, but also will then go on into the production side as well. So efficient use of equipment buying. And on the financing activities, there's an inflow there of 2.7 million. And of course, that is principally the fundraise, the 3 million fundraise, 3 million gross fundraise in April, May, and the repayment of some fairly low level borrowings. So cash up in the period from 1.5 million in March to 3.2 million now. And say that gives us a nice, strong cash position to see us through. So the strategy for growth, and the first strand of that is to build on those existing core services. Paul showed you the wheel at the beginning with the a la carte menu of services that people are using. Engineering has been a great cornerstone of that through the recent years, and we're building on the supply side in the current period and for the rest of the year and the future, with the library then expected to come on stream and start to contribute to the discovery side. So building on those existing core services and then say adding to those through development plans like the Mammalian library. Also in the period, we announced a couple of new distributors in Asia, one in India and one further east. And we are always open and continuing to keep an eye out for astute commercial partnerships, distributors and commercial alliances, which help us to reach out into the market with our things. We continue to seek milestones and royalty payments. So Paul mentioned the carried interest that we would have on a certain number of targets. And in some cases, we will continue to add either a milestone or a royalty, particularly from the discovery end of things. And we would expect that to increase as part of the antibody library when it comes into play, as it will be very much a licensing model in the main part. So we have obviously added the COVID-19, and there are 4 targets to go through the proof of concept plan of the library. COVID-19 is the first one down the track, and as Paul mentioned, then 3 immuno-oncology targets to follow. They in themselves may have value in the marketplace as we carry on. And then obviously where we see the next step in our value offering is around actually offering the discovery service, the mammalian antibody library, to customers, to drug discoverers, as a service to find novel solutions to unmet medical need.
Yeah.
Paul, do you want to say something about the library?
Yeah, I'll just say, yeah, the library is, one of the pivotal, piece of infrastructure that we've been building, and it's I was describing it to other investors this morning, like it's like Henry Ford building the production line. So we're trying to streamline discovery from idea to fully human antibodies within 3 months, which compares to maybe, to get to the same period, the same antibody using some current techniques could take you 18 months. And also this library can target unmet medical needs that other traditional or current platforms will not be able to prosecute. So it offers much more controlled synthetic development. So yeah, so the library itself, the business model of the library is going to be research access fees, and it's going to be milestones and royalties all the way through. So we're going to capture the full value of the antibody in this discovery library program. So we would see this as a much more higher value offering, and because it's a much more higher offering, we need to do much more proof of concept, and hence the 4 targets that we are prosecuting, the COVID-19 and the 3 immuno-oncology targets right now. And so through the calendar year of 2021, we will build up a body of evidence around those 4 targets, and we will release that evidence through relative RNSs and also to our collaborators at conferences once we get back on the conference circuit, and make also publish papers on these. And this is going to be very important because we're trying to target large pharma companies to come to us to develop their next generation antibodies. We're targeting people with deeper pockets and who appreciate the time is money, and if we can get the speed of antibodies, new drug targets out, this is going to create a high yielding revenue potentially going forward with milestones. So we need to create that body of evidence over the next year, and that fundraise is all being programmed in to provide that library proof of concept projects and evidence. So in that aim, we've recruited additional research scientists. It has been completed. We've got people from AstraZeneca. We've got people from Roche, actually in Switzerland. They come back and are now working for us. So we've really strengthened. And as James mentioned, these people, these are hard to come by. These scientists, it's a competitive market out there. So we've got them here. We're delighted to welcome them here in the last number of months. So we're hoping that this will add to the library and getting the results that we want to sell to the rest of the world in 2022. So we're exploring commercial opportunities for both supply of antigens also to diagnostic groups, because to pan the library is like panning for gold, and the gold is the actual antibodies themselves that bind to the target. So, but in doing that is what you go searching with, what you go fishing with. So we have made antigens for the COVID-19, and we have sent them out to some diagnostic companies. And this is for serology. This is to find out whether you have antibodies circulating in your body that can protect you from COVID-19. So these are going to be potentially, these antigens could be potentially of value going forward in 2021, 22, when the vaccines start to roll out, because this is the market, because vaccines won't have to check if the people need an extra booster or another shot to make sure that the immune system has been stimulated appropriately. So there's a lot of people out there, diagnostic companies, who have been working in the background to gear up for this vaccine serology testing of people. So it's more of a byproduct. We wanted to make our antigens to go make the therapeutic antibodies, but we have some of them that are very scalable. I mean, look, we can supply very large scale to if they're selected, but it's a competitive process. There's other antigens out there from other companies around the world, and some of these companies are basically screening hundreds of antigens. But we're in the mix, and I can't say now, but hopefully we'll get some feedback early in 21 to see if any of our antigens are worthy of going forward for commercialization in some of those kits. So in summary, 9% revenue growth achieved in the period of global pandemic. We're many thanks to all the staff here at Fusion Antibodies and our clients who have had to reorganize their businesses, the way they work, including ourselves, to keep ourselves operational throughout the period. And now we are in the new normal. We actually see our clients, still in the pandemic situation, but we're kind of seeing that the working methodology has been adjusted, and we're definitely more hopeful for H2 to be better than H1 for sure, but also with the vaccines coming in, that we'll get back to a period of normality maybe in 6 months' time or 9 months' time, so we can go to attend conferences as usual and promote Fusion Antibody services and our library. So the cash position, again, at 30th September 2020 was 3.24 million, and that has really given us a great balance sheet, and continue investing in our growth of capacities and also in our R&D projects. The £3 million raise was highly oversubscribed from our existing shareholders and a few new ones, and which really underpinned the support from our institutional shareholders. We also know that we've got a large number of smaller shareholders, and so that everybody's really important to Fusion Antibodies, and this is why I'm really glad that we are using this investor meet presentation today to reach out to all the shareholders, because all the shareholders have really, we have some very long shareholders, some small shareholders, but very long term, and they've all meant an awful lot of support to Fusion Antibodies. And the COVID-19 program, introduced as part of the Mammalian antibody library, which we've now branded and trademarked OptiMAL, is going progressing to plan. We've got the antibodies now, but we're right at the end of that production line. So we now get the antibodies out. We need to grow them up, and we need them early next year, get them across to the Queen's University Virology Department and get them tested to see if they do neutralize or kill the COVID-19 antibody. And that is going to be a massive deal, because it's primarily it shows we have a library, it works, and we've also potentially got an asset that we can out-license to other companies, pharma companies, to scale up and provide another solution to the COVID-19 pandemic. Also, and then we've got the other immuno-oncology targets coming down the track. So next year we've got a full program of our research and development around the OptiMAL library. And again, we are still processing and improving the algorithm and machine learning for our CDRX humanization. We'll be testing against that. It's almost like, just like I described it earlier, it's almost, I can remember Deep Blue supercomputer taking on a grandmaster in the 1990s. Well, this algorithm is going to take on our grandmaster, Dr. Richard Buick, in humanization, and hopefully we can increase by tenfold the amount of antibodies we can humanize going forward in 2021, 22 and beyond. I want to thank everybody for their taking time to listen to our presentation, and maybe Mark, our moderator, could we open the floor to questions.
Perfect. Thank you very much. Thank you very much indeed to both Paul and to James. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company do take a few moments to review the investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Paul, James, obviously investors had the ability to pre-submit questions. What I propose to do, given the fact that you said your presentation would be 40 minutes and you've given me a minute extra, what we have is a number of these questions that I'd like to start off with before perhaps addressing those that have come in during the live event and continue to come in, if that's okay with you guys. So the first question we have is, do you think you are looking at a stronger H2? H1 was, in my opinion, quite impressive given everything grinded to a halt for a couple of months. I know you have touched on that, but perhaps you could expand a little.
Yeah, no, we do. Thanks for that. It was a challenge in H1, you know, for everybody, just personally and business-wise. But yeah, because of we're now seeing that our clients settling down or adjusting to the new pandemic situation and got their workarounds. You know, we're seeing it's not perfect. It's not back to normal, you know, pre-pandemic sort of levels, but or working. But we can see that the inflows of money from investors in America is the highest it's ever been. And that's really encouraging, because that is the source of the well. You know, money coming into biotechs and drug discovery, that bodes well for our business and what we do, because, you know, we're in drug discovery and we need investors investing in various companies around the world, and for us to kind of for us to be part of the sort of tools and picks to mine out those antibodies for those guys in that space. So it's really encouraging, the money inflows, and we're seeing the levels of inquiries, you know, much more stronger than it was in H1 because of the real pandemic situation. So I'm definitely looking forward to a stronger H2, and we'll be certainly keep our investors up to date through the RNSs on that situation.
Brilliant, thank you. The second question was, last year's revenues grew by 79%. So this period's 9% could be seen as a failure. How will you go to profitability?
Maybe I'll pick that one up. Well, first of all, I think if you look back across the last 2 financial years, so 18, 19, 19, 20, you're looking at sort of an year-on-year growth of really 21%. And certainly 20 to 30% would be a very reasonable expectation in normal times. So 79% was perhaps a little strange. 9%, as Paul has just said, is absolutely not a failure, given the strange times we live in and the delays in decision making that our customers saw as they reorganized their strategies. So the ambition would be for more than that, but in current times, I think 9% is more than satisfactory at this stage.
Thanks.
In terms of route to profitability, then the raising of the 3 million in April, May will obviously push profitability out a little bit further, because that money will be reinvested back into the business and will obviously be a drag on profits. So I think we said in our annual report, which was out in the summer, we would envisage ongoing losses in the next 2 or 3 years. That's not losses because we're struggling. That's losses because of the planned investment in growth that I spoke about earlier. That's expenditure on R&D, expenditure on sales and marketing, and expansion to do that. So that is planned cash burn and planned loss making to deliver a bigger, better, stronger company at the end.
Thank you very much indeed, James. Paul, I think your camera is now back on, just to make sure you're aware of that. The next question we have is, we need to know about the potential revenue, about what the potential revenue is from the fee arrangements with drugs in trial, and how many there are and what the various stages they're at. I understand this may be difficult with NDAs in place, but perhaps, I guess, if you can, give a little bit of colour on that.
Okay, I'll answer this one. Right, yeah, this is a key part of the future value of fusion antibodies. But when we went to IPO, we had around about 5, we'll call them carries or milestones. But we purposely decided not to, give them any value at all, because at that point in 2017, these things are, as we talked, the normal time for a drug to go forward into the clinic and get approved is around 10 years, and this is where to start. So and we literally have no control. We do the work. We in some cases take a carry, but it's up to the company themselves to prosecute those and bring them forward to the clinic and go forward, and hopefully sell them to large pharma companies, and then reap the reward of those milestones or the percentage royalty to us. So we've seen other companies in the past maybe have put a lot of emphasis on those carries, and then when they don't pan out, well, the share prices take a hammering. So we thought, under promise, over deliver. So basically, we didn't give anything, but now we're going a lot. We're 3 years further down the track, and now we can see from 2012, 2013, the first 2 years. We did 10 humanizations. We now know 6 of those are in the clinic. And in total, we have 11 antibodies in the clinic. Some as far as phase 2, obviously the rest are in phase 1 at this moment in time. But in 2019 and 2020, we've done 100 humanizations. So we've now got more carries. We've got about somewhere around 25, 26. And we are planning in 2021 to really look at that and share with the shareholders in our annual statement. But we may get something beforehand. It's definitely an action point for us to really look at the value of that and when it may drop. It is a difficult thing to measure, because some of them are fixed milestones from as little as £100,000 all the way up to low single digit carries, and some of these antibodies, some of our clients are saying they could be worth $1 billion. They're selling for $1 billion, so low digit carry on $1 billion is a significant sum. It's you're talking tens of millions, $10-20 million dollars. So but it's a whole moving piece, like which ones would come forward, which ones will be successful. But there's no doubt that we can see the run rate currently of around, in the first 33 projects, 11 of those are in the clinic, so that's 1 in 3. So we are confident that some of these carries will come through, and we're probably maybe in the next financial year, and then going forward, these will definitely be coming into this space where we have carries. They should be hitting the clinic. That's usually the first milestone or fee to fusion antibodies for the work done previous. They should start maybe in next financial year and then going forward. But we will look at those milestones. We will try to map out as best we can. We'll work with our brokers and our investor relations and analysts to try and get that balance right of, not over egging it, but just sort of saying, this is the range, this is the risks, and allow the investors to make that decision themselves.
Thank you very much indeed. I've got a couple more pre-submitted questions, and I think the last one, there are a number of questions in the live event, so I might just go to that. But the next question is, what is the progress with COVID neutralizing antibodies? This was hoped for by the end of the summer.
Right. Yeah. Well, we were kind of hoping. I think that was maybe over optimistic. because we're still, I was just saying, like we were still making the library, so we're kind of building the library, like the actual the manufacturing piece, and that has about 12 major sort of components, and we had maybe 9 of those components all fixed, but the 3 towards the end still needed to be fixed themselves, the actual components, for the antibody to run down the actual production run. So because we're building it, the actual platform, as well as pushing the COVID-19 in behind it, it's just the technical challenges have to be overcome first. So we actually have overcome those technical challenges. We have now can see the antibodies now, and it's a case of pulling those antibodies out, growing them up synthetically, so there's enough antibody to pass over to the virologist to test, and really updated timelines. It's going to be Q1 of 2021 before we can get results from the virology department, at least first indication results that we have antibodies to COVID-19 to actually neutralize or kill the virus. So that is the current progress. So we have, yeah, go ahead.
Thank you very much indeed. I'm just obviously mindful of time. We've got about 10 minutes left. I know that investor feedback is particularly important, and I know that we want to make sure that we have time to redirect everybody. So perhaps if I could just ask you to click on the Q&A on the right-hand side of the slides. And if you wouldn't mind starting at the top, could I possibly ask you to read out the question and then give a response where it's appropriate to do so? You'll see them on, as I say, on the right-hand side of the screen.
Okay.
You want me to take that one, Paul, or?
Yeah, go ahead.
Yeah. So the first question is about the bid-offer spread, and sometimes it is ridiculously large. It can certainly widen. Poor liquidity discourages investors and makes raising capital by issue of shares more expensive. What do we intend to do about it? And would we consider an open offer with the next equity raise? I think that's right. A large proportion of our shares are held by management and long-term institutional investors. So the amount readily tradable can be limited, and obviously even among the smaller investors, of those who are buy and hold, then there aren't that many trading in the marketplace. So that then does create a reduced liquidity, and can lead then at times to the market maker spread pushing up to around 30%. I think it's around the 10% mark today, and we would hope that more activities like this and working to get more shares out into liquid hands of trading, but also as the investment community recognizes the underquality of Fusion, and the story strengthens and they can see the progression of some of the value offerings coming through, then the spreads will tighten as the portfolio and the revenue generating IP, some of these carries and things start to improve. Hopefully the spreads will tighten. In terms of an open offer, yes, we would consider that. We've no plans to raise for another equity raise, but we absolutely would consider that. So thanks very much for that question.
Okay, the next one is also, the question is, in the event that all your current collaborations with partners were successful and resulted in a product launch, what would be the maximum future revenues you would receive approximately through just the clinical and regulatory milestone payments? Right, we still have to work that out, but if they were all to come off, all we have right now, it could potentially, I'm going to say tens of millions, 30 million, 40 million right now. But that's, the run rate is probably a third. We know that things get killed off. The whole pharma industry tries to kill things before they go to the clinic because they want to try and skew success. Once you get to the clinic, they're more confident of success. So, we don't anticipate all of them being successful. In fact, what I said earlier, 1/3, which is an excellent number, by the way, is what we would anticipate. And also giving context, antibodies that get to the clinic at phase 1 have a 1 in 4 chance of getting approved. Very high safety levels, antibodies, and that compares to small molecules, i.e. like the likes of aspirins. If they get to the clinic, they have on average a 1 in 8 chance of being approved at the end. And really around safety is the main thing, or toxicity. So antibodies have a much higher success rate once they get to the clinic. So that's why it's the fastest growing space in drug discovery and precision medicine. At the turn of the century, at 2000, I would say there was probably literally a handful of antibodies that were approved. Now there's about 90, just over 90 antibodies approved, and I would say more than half of those approvals have occurred in the last 6-7 years.
The next one is around, as far as we're aware, have any of our competitors, CROs, introduced a hybrid model like ours with a mixture of milestones and royalties? And if so, do you know the quantum of the royalties are similar?
There is a few companies out there, that I do like there's Evotech. They're slightly larger than us right now, but their model of basically fee for service and also some risk share has been very successful for them. We do roughly know some of the standard payments. There's a lot of consultants out there in this industry, ex-pharma people who kind of leave pharma and become consultants, and they advise companies like us, like ours, to what to expect in terms of royalties and deal structure. So yeah, we have a fairly good idea, and it's actually one of the areas that we will actually, as the library rolls out in 22, we will use. We will strengthen our business development team to ensure that we are getting full value from the antibodies that we create.
If I take this one, do you anticipate that all collaborations with OptiMAL will come with a clause for future milestone payments or royalties? Yes, that's absolutely the business model for the antibody library. Our intention, as the thing comes in, is to charge a technology access fee at the beginning for actually getting access to the library, and but very much the earning from the library will be weighted towards a royalty payment later on. So it'll be a combination of an upfront technology fee, but it will always carry a royalty, as it's more of a licensing model.
Okay. Here's one here. How big is the market opportunity ahead of you? With a market cap of sub 30 million, how you look to scale up? Well, the market opportunity for our area of work is about 30 billion in the United States alone, but there is other CROs and in this space, and the clinical space especially. But us looking to scale up is we're looking to increase our capacities in humanization. That's one of our core technologies and platforms. We're looking to also grow our cell line development platforms. This discovery platform, like the library alone, that's a huge market, and we're really looking to. We can see it could be enormous. We know that one of our there's a competitor. The company's completely based on a library, one of the first libraries, the yeast library called Animab, and they're valued over $1 billion alone on their library. So we know that the market cap, if all goes well, like the library itself could push to $1 billion market cap validation or market cap value if the library does what we hope it can do and shortcut the time to delivery of fully human antibodies ready for clinical trials, and also really deliver those challenging antibodies that the current processes have failed to produce. So there's got to caveat that with a lot of ifs. You know, we are in prime position. We're absolute experts in antibodies. We've been in business 20 years, and you know, we're developing a platform that we believe could really you know, create a huge amount of value and create some great antibodies for unmet medical needs. So yeah, we've got to get these antibodies out. We'll know more in 2021 from the 4 antibodies that were produced in the COVID-19 and the 3 immuno-oncology. The immuno-oncology is absolutely, you know, huge. It's a paradigm shift in treatment, and there's been some great drugs out there, the immuno-oncology drugs like PD-L1 and PD-1. And PD-1 itself is set to be the biggest selling drug in the world. It's going to overtake, it is an antibody drug, it was the biggest selling drug in the world ever. It's going to overtake Humira, which was an arthritis-based drug, which is AbbVie sells $20 billion a year, but that's going to be superseded by these new immuno-oncology drugs, PD-1. So we're in a very lucrative end of the market. You know, the rewards are enormous, but you know, it's a competitive field out there. You know, we've got to make our platform have to deliver the best of the best antibodies. So that's what we're trying to aim to do, and the 4 antibodies that we're going down the pathway right now, we'll see the results all through this calendar year and the next financial year. Mm-hmm. And we'll keep you updated on those performance.
Yeah, there's a question there about the potential value of the library when it's fully functional. How far off do we see this, and the chances of being picked off by a big pharma company before shareholders see the value in that? I think the in terms of the full value of the library, it will start to come through once we are pulling live antibodies off this and are demonstrating the effectiveness of the library. In terms of revenue generation, we think we're probably, because it is primarily a licensing model, we're probably a year or 2 out from actually seeing recognizing revenues on that, probably in the year-end finance year ending March 23. We believe that we've got a loyal base of well-informed institutional investors who will support us and avoid us getting picked off too early in that story. And we are obviously out of our control ultimately, but we're doing all we can to make sure that as the value of that comes through, it is properly communicated both to yourselves through platforms like this and to our institutional shareholders, to make sure that people understand the value at the time of what we're sitting on.
That's brilliant. Thank you very much indeed. I am just mindful, obviously, we're coming through the hour. I think you've taken on probably most, if not all, of the questions. There might be 1 or 2 that we've gone through, but of course we can review those post the meeting. Paul, I wonder if I could just hand back perhaps just for a final couple of remarks to close up, and then what I'd like to do is redirect investors to provide you feedback.
Okay, thanks, Mark. I think it just like to sum up and say, you know, our cash balance is strong. We've invested a lot in our technology and to the library. We really do believe that it can deliver a transformational shift in the valuation of fusion antibodies, and you know, going forward, we're underpinning this with our existing services. As James mentioned earlier, we are striving as a business to get the profitability and carry those R&D costs going forward. So that is what we're about. But also with an eye to, you know, getting this library up and running, using that business model to capture the full value of antibodies for therapeutic use, and this will provide. We start getting the first number of these, even from the carries and the milestones, they start coming in. That will be an indication of the value and the worth of these antibodies for therapies that we're making. So it's a longer game play, but the future is potentially very, very bright. So I want to thank all the investors that have invested and stick with us, and hopefully I definitely encourage. I think always encourage. It's a great investment opportunity, and but it's definitely look into it. We're in here for the long haul. These antibodies, pharma companies are conservative. They like to see what the value proposition is. They like to test the antibodies themselves. So, but it's a very exciting time. I think COVID has shone a light on the pharma industry, how good these antibody therapies are. Just ask Donald Trump. He loved that Regeneron. He said, "Man, feel 20 years younger." That was 2 monoclonal antibodies in that mix. So yeah, just thanks for your attention. I think we will definitely do more meetings like this to reach out to investors like yourselves and make sure that you get the same attention as the institutional investors.
Well, what a good note to finish on, Paul. Thank you very, very much indeed to Paul and to James. Ladies and gentlemen, could I please ask you not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our website, the feedback page will appear. If you access via the link sent you by email, you'll simply be asked to log in, but we would very much encourage you to give the company your feedback. On behalf of the management team at Fusion Antibodies, we'd like to thank you for attending today's presentation. That now concludes today's session. Good afternoon to you all.